let's kickstart the topic E, which is the accounting reporting. So the first learning unit is the financial statements of the sole trader. So we have been dealing with the financial statements of the sole trader from the first page up until the last page now. So we're looking at the purpose and the composition of the financial statements, which are as follows: statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, and the statement of cash flow, which is actually not part of this. And then there's going to be a little bit of the notes. All right, so on Thursday, we were supposed to have, we actually had at last for about 35 minutes or so because the load shedding actually killed us. So we couldn't even complete that. So what happened is I've swapped topic E with topic D, and then topic D we will discuss as to when are we going to meet for it so that I can actually complete it. All right, the overall consideration would include the following: the going concern. So there are concepts that are concerned about the continuity of the business. So going concern is we're more concerned about whether the business is going to continue or it's not going to continue. So the financial statements will tell us as to whether we are making profit or we're not. Okay. So which is the financial statement must be relevant, predictive, material, and confirmatory for the decision making. Right. So you cannot come up with something that doesn't fit to be in the financial statements that you would be presenting. The faithful presentation, which says that the financial statement should provide a faithful completeness, neutrality, which means that they have to be fair as well, and they must be freedom from error. They must be free from error in terms of the presentation. Right, and the other one is comparability. So the financial statement should be compared with consistency from the various year of the same entity over time. So basically what they're saying is the financial statement should be compared. Let's say we're dealing with the financial for 2022. It should be compared with the financial statements historically for 2021. So verifiability, which it's different analysts and observers must reach the consensus of the depiction in the meaning in maintaining the faithful. Okay, so you need to actually make sure that your financial statements are verifiable. All right, so if they're looking for certain receipts, you must be able to make provision of those documentation so that we can actually verify as the auditors. Timeliness: financial information must therefore be available on or before the due deadlines, and they should be understandable. So the financial statement must be presented and processed in a way that is understandable and never complete or potentially misleading. The cost constraints: cost can be cost constrained to some benefit based on the quality of the information. That's basically we're looking at the cost in terms of the buy and the sell. Right. So the structure and the content. How are you going to structure the financial statement? It's quite vitally important, including the notes. Here we go. Here's the thing. The reason why we are conformed by the standards in terms of the accounting is just to avoid everybody else to do the financial statements their own way. So there should be a compliance or a structure that has to be in compliance with the standards, basically. So we're trying to avoid everybody else to come up with their own methodology of doing things in terms of the financial statements. Right, let's move on to learning unit 16. It deals with the non-profit entities. So you get an entrance fee, which forms part of the non-recurring income, meaning that you pay it once and then you are done. Accumulated funds, and they are capitalized. So the contract allocation account for the entrance fee is actually accumulated funds. They are credited to be accumulated funds, and they are not added towards the revenue in the statement of income and expenditure. Well, let's look at the interpretation. So entrance fee paid by members of the club are debited in the bank account and created towards the accumulated funds. So basically what's happened is, let's say we've got 10 members that are paying an entrance fee of 200 each. So if it gives you, let's say 2,000, 20,000, so what's going to happen is you are going to have the entrance fee on a Chi account, and you're going to have what's called the accumulated funds. So what's going to do is, we'll say entrance fee, and then you put bank, or you put accumulated funds, and then you put the money on the debit side, and then you open the accumulated funds because it's the contra allocation account, and then you credit the entrance fee or the bank. Looking at the membership fees there, it is common the members of the club pay their membership fees, which is sometimes it is called the subscription fees. However, not all the members manage to pay their membership fees on time, and it might be irrecoverable while the other members pay them in advance. So this is how it works in terms of the membership fees. You run a club, you've got your own members, and it is definite that not everybody is going to be on time or up to date with the account fees. So we call them the areas membership fees. And then there are those that are always paying their account on time, or they will pay it in advance, meaning that they will pay it forward. So we call them the advance membership fees. We'll see that when we get to the questions on how is it treated. So let's apply the double entry system in the accrual base of accounting equation. So the double entry system in the accrual basis, this is one of the things that students are always encouraged to know, because you deal with that all the time when you perform transactions. Income from members in the current year must be accounted for as revenue, and in the areas members must be added to the membership fees for that current year. Advanced members must be deducted from the membership fees incomes in that year. Separate accounts must be opened for the areas and the advanced membership fees. Area membership fees is shown under the current assets and trade and other receivables, and the advanced membership is shown under the current liabilities and trade and other payables. All right, I'm just going to look at, I'm just going to explain Bulletin 5. The areas membership fees is shown under the current asset and trade and other receivables. They say that because when you are in areas, automatically you become what's called a debtor. So that's why we have the trade and other receivables control account. All right, so meaning that you are liable to pay your areas membership fees. And again, when it says that it has to be recorded as the advanced under the current liabilities of the trade and other payables. Well, the reason for that is when somebody pay in advance, they've got the right to say that, depending on the MOI of the company, to say, I paid you in advance and I don't want to belong to this club anymore. Right? So I need my money, which is why the club will be able to owe the member their money should they terminate their membership fees. Of course, it will go along with the terms and conditions of your contracts with the club. Income from other sources of the club, like textile, bars, restaurants, and expenses items, are used in the calculations of the gross profit or loss in the trading, the statement of incomes and expenditure. You will see that when we do the statement of income and expenditure. So the first line item is actually your incomes. It's more like an income statement. The second part is actually showing the expenditure part. Okay. So donations and bequests are treated as income of the clubs, which will be debited under the bank account and credited to the accounts itself, depending on the size of the donation. The donation can be deceived by the club to be capitalized instead of treating them as a revenue. Then they must be set aside for a specific purpose and classified as a special fund. So we've got an account called the special funds account. So those kind of accounts are actually open for if there's a specific objective that the club wants to achieve, right? So the special funds are mainly established to achieve the specific purposes, end-to-end interest, right? So we're going to look at the objective when we start that, and then we're going to look at how much will be needed when we start a certain project for that. And then we're going to invest the money and then end the interest on that one. As soon as it is the amount that is required for that specific objective, then we can utilize that donated money. They are also accounted separately from the accumulated funds, depending on the club agreement, and if the income received from the special funds are agreed to be used for general expenses, then the income must be shown under the statement of income and expenditure. When the income earned from the fund account are set aside for a specific purpose, the funds are referred to as expendable, and if the income earned from a special fund may be used for a specific purpose, the fund are referred to as non-expendable. All right, I've got a question for you based on this one, so we'll see that when we close the page just now. Expendable fund, let's have a look at that. This type of fund is usually established to acquire an asset for NPO. NPO is non-profit organizations. Donation made to this type of a fund and interest on the investment accredited to the funds until the desired amount is raised to buy that asset to complete a specific project. I think I have explained that in the upper part there. So when that specific objective has been achieved, the special fund must be closed against the accumulated fund, meaning that when we are done with whatever that we've planned as a specific objective, then we close the account and move on to the future. Non-expendable fund, the income from the above account may be utilized to pay for certain expenses of purchase of an asset, and the expense to be incurred may not be more than an income earned from that investment, and if not, the club is forced to make other means to finance the outstanding amount. All right, let's say we've got a donation of about 10,000 rand, and the project is going to worth us like maybe 3,000 rand, and we don't reach that in terms of the investment as a return. So what is we have to plan to say, okay, we give this thing 2 years and then we haven't reached whatever the interest that we have planned for, then what do we do? Maybe there will be a contribution from the members of the club so that they can complete that kind of a project. Income earned from this type of investment should be credited towards the funds account and should as well not be part of the income expenditure. Right, let's look at the financial reporting by the non-profit organization. So statement of receipts and payments. This is the only financial statements prepared by the club at the end, which usually present the cash transactions of the club. So we're going to have what's called the opening bank balance that will form part of the receipts, and it reflects the negative, then it must be shown in brackets. So this is how it works. When you do the statement of receipts and payments, the first line item that you're going to have is the bank balance. However, you need to look as to whether it is favorable or it is favorable. So if it is favorable, you just put it as it is. If it's unfavorable, then you put them in the brackets just to show that it's going to get a minus. You all know that some certain transactions or items, they've got the disadvantage and the advantages. So let's have a look at their disadvantages. Only cash transactions are recorded, meaning that credit transactions cannot be recorded. Statement may include the receipts and payments of incomes, expenses, assets, liabilities, and fund accounts. So the accrual basis assumptions are not applicable due to advance, and accrued payments are all included. Surplus or deficit cannot be determined. The financial position of an entity is actually unknown. So the surplus or the deficit, I think you get that on income and expenditure account. Let's note on this, statement of the receipts and payments would not supply sufficient financial information. Therefore, the statement of income and expenditure and financial position are also required. That would depend on the size of the entity. So what they're saying is the information that you put under your statement of receipts and payment, it's actually, or the chances are, it's not going to be sufficient enough to provide that accurate information. That's why you are actually doing the financial statements, which is your income statement in this case, or the statement of financial position, because that reflect a true and accurate information in regards to the entity. Statement of incomes and expenditure. The above statement is like the statement of profit and loss and OCI of a trading concern. The statement is intended to determine the surplus or the deficit of the non-profit organization, and the surplus is added towards the accumulated funds, and the deficit is actually deducted. That I've got a question based on that one as well. So we'll see what's going to happen. The necessary adjustments are required at the end of the period and taking prepayment and outstanding income at the beginning into account. Right, let's have a look at the last remaining units just before we get to our questions. Incomplete records. So in terms of the understanding of an incomplete records, we are actually referring to in terms of the complete records, we know that accounting deals with 2 or more legs when we record up a transaction. So the incomplete records is actually dealing with just one leg of the transaction. So meaning that when you are actually in your ledger accounts or the cash receipts account or whatever that you're doing, if you've been doing that without a contract allocation account, it means that there's a high chance of you recording that amount being incomplete, meaning that they are actually not that adjusted. It is of paramount importance in accounting to follow the double entry system, and not so the records would be incomplete. So double entry system, you are actually dealing with 2 or more legs in accounting. So if you don't follow the double entry systems, that means you are going to have a problem. So this is how it works. Let's say you bought goods on credit from whoever the store it might be. The first thing that you must just know is what type of an inventory system are you following? And then the second thing is you just need to establish the accounts to be affected. So when you buy goods on credit, it's a no-no for a bank because there was no money that was used to complete that purchase on the transaction. But what are the accounts going to be affected? The goods in question, when you receive that, they're going to increase, and you are going to have what's called the debtor or the trade and other payables control account, because you now owe your suppliers. So when you purchase goods on credit, so the trade and other payables control account, which is trade creditors, it will be affected, and the goods in question that you bought, it will be affected as well. So, but the question is how? Remember, we deal with the issue of the debit and the credit in terms of the increase and the decrease. So if the good reflect an inventory, so say inventory is an asset, it does increase on the debit side. Let's say you bought them for 2,000 rand. So what are you going to do? You'd say inventory to account on the debit side. You're going to put trade and other payables for that specific. Let's say it's Pick and Pay. Just say trade payables or trade creditors, and then you say dot Pick and Pay. Then you're going to open that Pick and Pay account. Let's say trade receivables, Pick and Pay, and then on the credit side, because the liabilities increase on the credit side, then you are going to put that specific items that you have bought, inventory, for example. And then you put that with an amount of 2,000 rand. Let's look at the calculation of the estimated profit or loss from the incomplete records. So it says that even though there are no statutory obligations for all sorts of business types, there are times where the profit or loss must be calculated. For example, entity applies for a loan, or the bank overdraft facility its own businesses. In terms of the basic accounting equation shall be applied in the calculations of that kind of profit. Okay, no ledger accounts are actually required. The net asset value will be determined as follows. Who can tell me what the net asset value is? What's your understanding of the net asset value? Let me bring you up to speed. Joanna, do you understand what the net asset value is?
Yes, I would say it's the amount of assets, the value of the assets after all necessary deductions have been taken into account.
Right. Do you know what are those necessary deductions?
So with inventory, it will be the cost of sales if it's the perpetual system.
Okay.
Or damaged goods.
All right. Thank you so much for the contributions. Sanlicious Valoy, do you want to add there on what Joanna said? Valoy? Yeah, Sizwe. Sizwe, welcome to the class. Do you want to tell us what the net asset value means, or what is exactly what is the net asset value? All right, the net asset value. Thank you so much for your contribution, Joanna. The net asset value is a complete equity. All right, so when you take your, in terms of the basic account equation, when you take your asset and then you minus your liability, you will get what's called the equity. Right. So the equity is a term. Sorry, the net asset value is the term that is used for an equity. So that's how it works. Just that way, period. Just want to check what's going on with. Okay, Jessica's complaint no longer has access to the chat. Okay, so I think maybe she's got a problem the network. Okay, so let's move on. Just you guys to understand what's called the net asset value. Let me bring my notes here. All right, the net asset value will be determined by when we're referring to the cost price of an asset at the end of the financial period and adjust in terms of the disposals and the additions. In the use of the invoice, credit notes, debit notes, and the receipt to establish the list of the debtors, including credit losses and discount granted. So it's very important for you guys to understand what the source documents are, because sometimes they give you transactions that deals with source documents. So, but if you don't know if the source documents belongs to the sales journal or the sales returns journal, the purchases journal, the returns on the purchases journal, or the CRJ or the CPJ, you're definitely going to have a problem, because they can give you that kind of a credit log and tell you on which books of the journals or books of first entry does it go. All right, we also counting the cash amount on hand, what we have. So the agreements with the creditors and the short-term prepayments. Profit can also be determined by using the equity and with the year-end equity method. So that's when we're dealing with the issue of the statement of changes in equity. So how it works is you're going to have what's called the open balance of that equity. Usually that's your capital. And then you're going to look as to whether the owner has withdrawn some cash or some items for personal use. That's your drawings. And the last one, we're going to look at what's called the net profit or the net loss. If it's a net profit, that means it's going to be without the brackets, but if it's a net loss, that means that it would serve as a deduction. Plus, profit can also be, okay, I've read that, adjustments from the incomes and expenditure drawings and additional contributions by the owner. So basically, that's when you do your statement of changes in equity. The last part, preparations of the account from the incomplete records. So there are certain steps that we have to follow. So we can read properly. Steps to be followed. So you prepare the statement of the assets and liabilities at the beginning of the year. So at the beginning and at the end to determine what's called the liabilities. So in the equity or the net asset value. By reconstructing the bank account, establish the use of the cash flow with the cash, and then you calculate the purchases and the sales figure. Accruals and the prepayments must be shown in the statement of financial position. So when you prepare the statement of assets and liabilities at the beginning of the period to determine the equity, so you remember when you do the statement of financial position, that's your balance sheet. You need your assets and then you need your liabilities so that you can get to what's called the equity. You must be able to know what the framework looks like. And then you by reconstructing the bank account, we know that is a current asset, and that must be disclosed under your current assets when you do the financial position, statement of financial position. So you have to establish the use of the cash flow to the cash. That's again a current asset that falls within the bank account. Then you need to calculate the purchase and the sales figure. But we know that sales minus the cost of sales, it gives you what's called the gross profit. There's another way of getting through to the gross profit calculations. Either you do what's called the complete statement of profit and loss and other OCR, or you can do what's called the trading statement. So the trading statement is purely to calculate how much will be the gross profit. I got a question for that one as well. So we'll see on what the question says. The accruals and prepayments shown in the statement of financial performance. But we dealt with this before when we're dealing with the adjustments. So we dealt with the prepayments, the accruals, the income received in advance, and the depreciation, and so forth and so forth. I think they are on Learning Unit 5 of your study guide, if I am not mistaken. Let me bring up to speed. Are there any questions before I go through to the questions that we have? Any questions from your side? Sanlicious Boloi, do you have any questions? Any questions? Hi, Paul. Welcome to the class.
Thank you, sir. Sorry, I'm late.
No, it's fine. You find us doing the last part of the topic E. Okay, so I don't know where you could ask there, but do you have any questions? Before I go ahead?
No.
Because we're going to attempt questions now. No questions.
No, I don't have any questions.
Okay. Yeah. Okay. Johanna, do you have any questions?
I'm fine for now.
Oh, you're fine for now. But I want this person, Baloi, to speak actually and sees me. Baloi, please talk to us. Baloi. All right, Sizwe, do you have any questions before I go to the questions?
No, sir, I don't have any question for now.
Are you sorted?
Yes.
Okay, that's great. Baloi, everybody else has spoken. It's only you that you haven't spoken. We're not sure, guys. If you don't talk, we're not sure as to whether you do hear me or what. So it's best if when I call your name, it's best to actually communicate with us so that we are clear that we are on the same page.
Sorry, Mr. Miso.
Baloi. Yes, ma'am.
Yes. So you're saying you are on topic E, accounting reporting.
Yes.
Are you doing topic E? Okay.
We are doing topic E. I think I mentioned that on our WhatsApp group.
On
E.
E.
I don't know if you've seen that. Okay. No, that's fine. Baloi, come on board. Come on board, please. Okay, Baloi, I think he or she is very shy. Okay, I'm gonna open up a question here and then we'll do it together. It's not that it will be covering all this segment that we've covered under topic. Sorry, I think I'm bringing the notes back. Hold on for me, please. Just a moment. Okay, there we go. All right, let me know if you do see my Excel spreadsheet question. Do you all see that? Is it appearing?
Yes. Yes.
All right. Thank
Yes.
you very much. All right, we've got a club here. It says that Protein Club, and then we've got a pre-adjustment trial balance as at the 31st of December 2022. That's our year. Okay. Right, so we've got a list of items that they do appear on our pre-adjustment trial balance. I'm just going to go through them one by one, and then we will be able to do whatever that is required. All right. So I remember when I was doing my undergrad, the first thing that I was doing is that you guys are actually looking, okay, but it will apply as well. The first thing that I do, I would look at the required part, and then I would know or assume how the question would look like. You understand? If the question says income statement, I know items like your sales returns, cost of sales, and stuff like that, they must be there. You understand? So I used to go to showgrounds with the different types of highlighters and different types of pens so that I would highlight with different colors, if it's assets, if it's incomes, if it's what. And I start by doing the calculations before I disclose them under the required part. So I used to earn more marks there. And not necessarily that I was actually a smart student, but my strategy used to work for me. You understand? So that's why to this day, I think I only had problem with accounting when I was doing my postgrad. But when I was doing my undergrad, even though when I was doing my first year and second year, I couldn't take things seriously. But my strategy, it was actually developed in high school that whenever you see the questions, look at the required. When you see the required, look at the information and calculate whatever that you can at that time. All right, and then you do the framework. Okay, so that's the advice, because now you guys are doing the multiple choice questions, so you can just, it has the required part. You can just look at the required part, and then you do whatever that is actually necessary there in terms of your calculations on the other side. Right, we've got an asset, which is the furniture and equipment with a cost of 10,000 rand. And then we've got the accumulated depreciation for the furniture and equipment is 2,170. And then we've got the membership fees received of 15,000. We've got the membership fees in arrears in the previous year, 31st December 2021, of 900 rand. We've got the membership fees received in advance. We've received that in advance in the 31st of December 2022, but it is for, sorry, the 31st December 2021, but it is actually for 2022, excuse me. Right, telephone expenses, 450. So that the advanced membership fees is 1,100 rand. And then we've got wages of 5,000 rand. Water and lights, 4,600 rand. The maintenance of the building is 1.5. So we've got a Rudy fund on the 31st of December 2021 with an amount of 20,000 rand. So sorry about that. And we've got Rudy fund 31st December 20,000. Furniture and equipment that cost 14,000 rand. Admission fees received to Hobbies Fair 6,300 rand. Hobbies Fair expenses 8,200. Accumulated funds 25,950. Interest expense 3,000 rand. The current account Absa Bank is favorable 1,400 rand. And then we've got inventory. We closed that in the previous accounting cycle, but it's going to be the opening inventory in 2022. 200 rand purchases, 3.6 and sales 6,200 rand. And then we've got an inventory of 30 rand. The look at the one says that income to body fund only use the millions of the so the membership fund actually is 8 rand will becomes 1, while the depreciation then be accounted for at 10% per annum on the diminishing balance method. Okay. I just brought a smaller portion in regards to the depreciation, but whenever we meet during the week, we're going to go in turns because that was the part that we were supposed to do on Thursday. We're going to go in turns on the depreciation. So this one is just a smaller part. But number 4 says that 6 new members joined the club during the year, and the entrance fee of 200 rand per person is included in the figure of the membership fees received, but should be included in the accumulated. The refreshments on the inventory on the 31st of December 2022 is 300 rand. Interest income at Wego's Bank was received in respect of the Rudy Fund account. And the current account, which is at Absa had a favorable balance of 1,350 at the 31st of December. Let's look at what are they looking for in terms of the required. So we need to open up a special fund account for Rudy for the year ended 31st December. We're going to do what's called the trading statement. And then we're going to do the income and expenditure statement, and then we'll do the statement of receipts and payments, and then we'll do the accumulated funds statements, and then we conclude things with the membership fees. Okay, like I said before, the most important thing here is the approach. When you are faced up with a question, you must be able to have a better approach that works for you. All right, have you guys touched base on the topic E? Who actually touched base on the topic E? Who did topic E? So you didn't do topic E?
I didn't.
You did it.
No.
Joanna, you said you did it? You did it?
I've read through it, but I haven't done the exercises.
Okay. And Sizwe, have you touched base on your exercises? Sizwe, have you managed to actually tackle topic E? Sanlisha's Baloi? Right, guys, let me give you the best possible advice. I know that students, when they study with UNISA, it gets intense every day, especially if you are working, because you may find out that you are doing a lot of modules at the same time. Right. However, with accounting, this is a content that requires a students to practice almost every day. Even if you do a one question for about 30 minutes, just to try to navigate around what could be the required. The other thing is, I've seen that when I was doing my CTA, when you go to the class, if you are not prepared, you're not going to see anything. Believe it or not, you are definitely going to be clueless. Okay. The last important part is, remember, in accounting, it's one of the easiest ever subject. Why am I saying that? It's a principal content. It is a principal content. Saying that is, if you are required to do, for example, statement of profit and loss and other OCI, you cannot say sales minus the cost of the equipment would give you the gross profit. It would never happen. The standard tells you that sales minus the cost of sales is the gross profit. Even though you have to seek a way of how you're going to calculate your cost of sales, right? So it's principle, it's standards. You can't change that. You get what I'm saying? So you need to be aware of what it actually helps if when you do questions, you even go back and say, okay, let me just try to do this ledger account. The more you practice, the more things are going to get much more easier for you. You need to be very, very careful of that. I always, when I was in Florida there, I used to tell my students that, I remember when I was doing my second year accounting, I think it was a group statement. There was a portion that I didn't even know at all. And there was a portion that I knew. And I remember on my way going to write that exam, I prayed that the portion that I knew should at least contribute about 60% of the exam. Because if it does contribute about 60% of the exam, I'm definitely going to pass it. It's either I'm going to get 55 or 60, like the whole, because I knew exactly what I needed to do. I get there, 40%, lucky enough, I get there, the 40% is the part that I don't know, and the 60% is what I knew. And I was like, thank God, because I am going to pass the thing. And believe me, when I left the show grounds, I knew exactly that I did pass, because I was over prepared for that. You understand? So you don't really need to know the entire segments in terms of the contents. But if you know something, you do know something, and nothing can change that. That means you are prepared enough to face up with that. So I went there and I wrote what I knew, and then I passed. So in future, guys, I'm begging you, take, especially those that are actually working, take the modules that you think you will be able to do them. Do not take a lot of modules, because you're going to end up being confused and you are going to fail all of them. So in future, take 3 if you're working, or take 4 if you are working. However, make sure that you give it your best. Make sure that you can give it your best. You guys are very lucky. You can call you a lecture and do a Teams meeting if you don't understand anything. And then you can actually call up me if you don't understand anything, and then we can actually tackle whatever that is bothering you in there. Use that opportunity. You will thank me the other day. All right. So help me here. How are you going to approach this kind of a question? I'm going to open another sheet, and I will be able to go some of the things through with you. Hold on for me. I'm just trying to design the T accounts for the special fund accounts. All right, we've got, the first question says that we have to do Rudy's special fund account. So this is how you approach it. The first part, you just say Rudy, or you can say special fund account. Don't worry about the solution. I'll show you how it looks like when we are done. Okay, and under the special fund account, you're going to have a column for the expendable. We're going to have a column for the expendable and the non-EXP, right? And on the other side, you are going to have the expendable, that is your credit side, and then you're going to have the non-expendable. It will be like this. How would you go about recording this kind of a T account? Right, the first thing you're going to have what's called the opening balance on the credit side. It's an income account, right? Remember? So you're going to say, sorry, I have to take this one. Sorry about that. All right, you're going to have what's called the balance down on the credit side because it is an income, and then you're going to have 20,000 rand. Right? And then we're going to look at what does the additional information say in regards to that. Okay, let's see. I'm going to go to the question quickly. Is that Excel spreadsheet? Hold on for me. Yeah. Let's just go to sheet 1. All right, the second thing that you're going to do is you're going to look at transactions that are in association with that special fund. Let's look at the additional information number 1. It says that the income from Rudy Fund may only be used for the maintenance of the building of the club. Right, let's go and look at our trial balance and see what the maintenance of the building was. Maintenance of the building. Okay, I'm going to highlight this in red. Just a moment. Okay, it's 1.5, right? And let's see again what's happening with regards to, all right, Rudy's here with 20,000 rand. That's your opening balance. And then let's go down and check what's happening. The interest income at Wagos Bank at 8% per annum. Let's see what are they saying. Look at line item number 6, where it says the interest income of Wagos Bank was received in respect of Rudy Fund. Okay, so what you're going to do now is you will say, and let me go to sheet 2. It's say interest income, and you'd say 20,000 multiplied by 8%. See how much does it give us? Hold on. Somebody help me quickly with how much is the figure for 20,000 of 8%? Say 20,000 multiplied by 8, you divide it by 100, which is 1.6.
1,600.
1,600 rand. So you're going to expand the 1,600 rand. And then the last thing that you must do here is to balance it all. So meaning that your expendable will be 1,600 rand and your non-expendable. So this is easy. It's more like a copy and paste thing, right? But we've been told that the interest income has to be utilized for the maintenance of the building. We found out on our trial balance that the maintenance of the building is 1.5, right? So what you do, you'd say maintenance on the debit side, maintenance, and you'd say building. The amount is an expendable of 1.5, and the non-expendable will be a dash. That means that it's a 0. Okay, let me just do this. But instead of putting the dash, because it will give me something that doesn't make sense, I'll just put the nil on both sides. Right, and then now we are finalizing things. You're going to say the balance. Carried out. So how much would be the balance carried out in the expendable? You're going to look at the difference between 1,600 rand and 1,500 rand. What is the difference? In order for your debit side to be equal to the credit side, then that means you are going to have a balance carried down of rand, just to make it to 1,600 rand. And your non-expendable will be 20,000 rands. And then you close it off, let's say 1.6, and then here you're going to have 20,000 rand. So eventually the same amount. Can you all see that? So in accounting, we have to look at how much is it going to be the opening balance of next year, right? So you'd say balance, carried down or brought down. With the balance carried down from the debit side, you will just bring it here as you brought down, meaning that it's going to be opening balance for next year. So you'd say balance brought down, and then you're going to have 1.5 and 20,000. Okay, so and this is how you are closing it. And then you're done. Okay, any questions before I move on? Okay, if you go through to your study guide and treat about 2 or 3 questions in terms of the special fund account, you should have an idea as to where is it going. They talk about the same thing time and again, over and over and over and over again. So it's the expendable versus the non-expendable. Then you're going to look at the issue of the interest, and then you just actually balance things off, and you're fine. Who need help?
Sorry, the balance brought down. I would have thought it's 120,000.
You mean this one?
On the credit side.
You thought it's 120,000?
Just 100 on the expendable side and 20,000 on the non-expendable side.
Okay, fit me here again. You said the expendable on the the balance brought down on the expendable. So how much is it?
100.
100 rand. $100?
Yeah.
Okay. And then why would you think that? That's quite an interesting question, actually. I like your thinking.
Because we have 1,600 rand, we spent 1,500, so we have 100 left over.
We have 100 rand off and left over. That's quite good thinking of that knowledge. But in the special fund account, it's actually not treated in that way. We're going to look at how much are we supposed to spend for the next coming project. There's the difference between the expendable on the credit side and the expendable. If it's a normal 2 ledger account, like maybe let's say you're dealing with the property, plant and equipment, it was going to be in that way. So what she says is she's very much correct, and I understand her questioning, because we've got the balance brought down of 100 rand as the difference between 1.6 and 1.5. But we are still going to use that for the maintenance in the 2022. That's why you see the 1.5 in here. In 2002, yeah, 2022, sorry about that. Okay, but if you're not happy about that, I can clarify for you what I'd like to do during the week, and then when you need, I can explain that, or I can get more clarity for you on that.
Okay.
Okay, no problem. So that's Johanna, right?
Yes.
Thank you very much for that question. Can I move on to the next one?
Yes.
Can I move on to actually, sorry, Johanna, actually, let me apologize for that. Sorry about that. It's actually 100 rand. It's not the 1.5. Right. So the notion would be the 1.6, the 1.5 for the maintenance of the building has been utilized. That's very correct. And we are actually left with 100 rand. That should be an opening balance for next year. We didn't use this one, the 20,000 rands. Okay, so there's no need for me to actually find out for you on that one. So that's really 100 rand. You're correct. Thank you so much for that. All right, can I move on to the next one? Can I move on to the next required part, or is there anyone with a question? Hello?
I think you can move on.
Okay. So the second part says that we need to do the statement. Let me just check the required part. Trading statement. So what would be your approach like when you do the trading statement? What do you think when you're faced up with the question regarding the trade statement? Somebody help me. Somebody help me. Mpo, any idea?
I'm still scratching my head, not at the moment. Sorry.
Okay, no problem. Sizwe, please come on board. Sizwe, oh, we've got a new somebody here. Rolevua Mukiti. Rolevua, how are you? Welcome to the class. Welcome to the class. Jimmy, is your mic working well today? Jimmy?
Hello, Puti, how are you?
I'm great, how are you? Is your mic working very well today? I can hear you now.
No, I'm using somebody's laptop.
Okay, no problem. But welcome to the class.
Thank you. I've just joined now. Yes.
Okay, no problem. You found us in the middle of our topic E part, and I was asking the students about what do you understand about the trading statements?
Oh, okay.
Do you have an idea? Do you have an idea on how does it work? What are we looking for when you are required to do the trading statement?
And you going to examine your incomes and expenses?
Not quite exactly.
Okay.
No, not quite. It's going there, but not quite exactly. All right, let's see. Okay, Mposa that she's not. Rolevua, give us an idea, please. Rolevua. Okay, this is how it goes. When you are required to do the trading statement, they want you to calculate how much the gross profit is. So it's another way of determining your gross profit without doing an income statement. So do you guys have a process of how you're going to calculate your gross profit? Gross profit?
Is it not?
The 1%
Sales?
at a time?
Is it not sales minus cost of sales?
Sales minus the cost of sales. That is very correct.
Then you get the gross.
So what's the process of calculating your cost of sales? It is not given. What do you need in order for you to get to the cost of sales? You need in order for you to get through the, okay, you can go ahead, please. Sorry about that.
I'm just thinking, but I'm just maybe cost of sales. It's isn't it the your income, and then you minus the expenses, and then you get your cost of sales.
No.
Okay.
No, I'll show you that. But thank you so much for trying. Anybody with an idea?
Is it not purchases?
Yes.
opening inventory,
Opening inventory.
you add all the expenses for bringing the goods into the, like your carriage.
Carriage and purchases.
Yes.
Okay.
And then you less them, you less them, and then at the end you are going to include the closing inventory of the last financial statement.
Okay. Do you add it or do you minus it? The closing inventory.
You add it.
You add it.
Yes.
Okay. And then the opening inventory, do you add it or do you minus it?
You minus it.
Okay. Thank you very much for that tricky. Sorry. Thank you so much for that input, Jimmy. That's very correct. However, you mismatched your process. What happened is when you come with the cost of sales, you need an opening inventory. You add your purchases, and then you add your carriage on purchase. Import and exercise duties are always added as well, if they are. And then you deduct your closing inventory. That's the process.
Okay.
Yeah. So looking at the question, thank you so much. You had an idea on how you have to do your thing here. Thank you so much for that. Let's have a look at how much is the revenue. When you look at the spreadsheet there, where do you find revenue? It's a pure sales amount, right? It's 6,200 Rand. So the revenue will be 6,200 Rand. And then how much is the purchases? How much is the opening inventory? Do we have an opening inventory? Do we have an opening inventory? How much is the opening inventory, guys?
200.
200 Rand. Thank you very much. I thought you guys didn't know how much is the opening inventory because it's there. Okay, let's see. Thank you so much. And how much do we have the purchases? How much is the purchases? Can you guys see my spreadsheet, the trial balance?
Yes.
Okay. How much is the purchases?
3,600.
3,600 Rand. Thank you so much, Jimmy. Okay, and then do we have any carriage? Let's have a look at the trial balance. Do you have any carriage on purchases? No carriage on purchases. Do we have any exercise duty?
No.
We don't have that. How much is your closing inventory? I'm going to go to the additional information. I think it's somewhere there. How much is the closing inventory? It's 300 Rands. Okay, and this is where you put your minus. You are taking it out. So somebody help me with the calculator quickly. How much is 3,600 plus 200? Is it 3.8? Am I correct?
Yes.
How much is 3.8 minus 300 Rand? Isn't it 3.5?
3.5.
3.5. That is your total amount of the cost of sales. So you're going to put it in the brackets in order for you to get what's called a gross profit. Right. So how much is the gross profit?
3,500 Rand.
3,000? So the cost of sales is 3,500. And how much is 6,200 minus 3,500 Rand?
It's 2,700 Rand.
2,700 Rand. Okay, that's your gross profit. Right. Where do you think this gross profit goes? Why is it important for us to determine the gross profit? Are we going to end things here, or are we going to use it somewhere as part of the required?
We're gonna need it at the balance sheet.
At the balance sheet?
Yes.
But we're not required to do the balance sheet. And remember, the gross profit is an income statement item.
Oh yes, oh yes.
Why is there need for us to actually calculate this gross profit? Are we going to use it somewhere else, or are we just going to leave it like this?
I'd want to put it in accumulated fund statements.
Accumulated fund statement. Okay, but the accumulated fund statements say that it only deals with the expendables and the entrance fees, not the gross profit.
Okay. Then income and expenditure statement.
Income and expenditure statement. Yes, it is an income statement account. Thank you very much for that. It's an income and expenditure statement. That's where you're definitely going to put it there. Are you all fine? Okay, is there anything that you guys want me to clarify just before I move on to the next one? Are you guys fine, or can I move on? Listen, if you're not happy about something, you can just tell me now so that we can sort it out. Everybody fine?
I think I'm fine.
Okay. Everybody else is fine. Mpo, are you okay? Joanna, are you okay? Sizwe? And Baloi?
Yes.
All right. No, that's great. Okay, can we do the, before we get to those ones, can we do the membership fees account? I'm going to give you about 5 to 10 minutes break, and then we'll finish off the remaining two. Can we do the membership fees account? What do you guys understand about the membership fees account? I doubt there wouldn't be any questions in regards to the membership fees account. Membership fees account?
Is it not for clubs and societies, something like that?
It is an income account for the clubs, yeah. NGOs and POs, yes. All right, let's go back to the question and see where does the membership fees account goes and where does it not actually feed. It is an income account, so income account are actually increasing on the credit side and they do decrease on the debit side. Okay, but that would always be the case as to how where the transactions are structured. Right. Okay, let's go to the questions and see what's going on in the membership fees accounts. All right, number 6 says that we've got a membership fees received of 15,000 rands, and then we've got a membership fees in arrears in the last accounting period of 900 rand. And then we've got a membership fees in advance on the 31st of December 2021 of 1,000 rands. Right, let's go through to the additional information. We've got the membership fees, which is in arrears in the current year, 800 rand, and then we've got the one that has been received for 1,300 rand. Right, let's have a look at additional information number 4. It says 6 new members joined the club during the year, and the entrance fee of 200 rand per person is included in the figure for the membership fees received, but should be included in the accumulated funds. 6 new members joined the club during the year. The entrance fee of 200 rand per person is included in the figure for the membership fees received, but should be included in the accumulated funds. How would you deal with this kind of an account, a transaction actually? How would you deal with that? Let me bring the blue color here. The approach, Jimmy, what would be your approach with that?
I think they will be included in the account statement of the current financial account.
In the which statement is that? Which statement are you referring to, Jimmy?
Number 6.
Number 6, or it is included already in the 15,000 rand, but it doesn't belong there, meaning that we have to take it out. Okay, we've received 15,000 rand. This is how you're going to do it. You're going to say, on the credit side of the membership fees, you can have bank. We have received that amount of the money in the bank, right? So that's a CRJ item. The amount is how much? 15,000 rand. Do we agree on that part? All right. Remember, we received 900 rand in the previous, sorry, we had an areas amount of 900 rand in the previous accounting, period. What do you think we should do about this? We haven't received the money. We can't increase our membership fees account. It is actually in arrears, meaning that it has to come to the debit side. So what you're going to do, you'd say, you can say the balance brought down as an opening balance, or you can say areas membership fees, membership, and you put an amount of 900 rand in here. Right, let's go and have a look at the other one. So we've got the one that has been received in advance. Remember, that's a liability, right? We have received that one in advance when we closed in the previous financial year. So should these people decide that they do not want to continue with the club, obviously the club must pay them back the advance payment. So because it's a liability and it does increase an income, what you're going to do, you'd say, you can say bank, or you can say your balance brought down in the current year, an opening balance brought down in the current year with an amount of 1.1 on the credit side. Are we all together, guys? Are we all together? I'm just going to show you the solution at the end of this thing on how does it look like. Are we all together?
Yes.
All right, let's have a look at this information that we're given as part of it. Remember, our trial balance are sorted now. We are fine with that one. Let's look at the information under, sorry, the additional information. We've got the areas one with an amount of the 800 rand, and we've got the one received in advance in the current year as well. So you've got 6 members that have joined the club during the year, and the entrance fee is 200 rand per person is included in the figures. Can we just highlight that in blue so that it can all be clear? So out of the 6 members, what you're going to do, you'd say 6, and then you multiply that by 200 rand, right? That's actually for the entrance fee. So how much is 600? Sorry, how much is 6 multiplied by 200?
1,002.
1,002.
So this is what you're going to do, because now this amount is already included in the 15,000 rand. So what you're going to do is you have to take it out. But how do you take it out? You have to decrease the membership fees account, meaning that it will come to the debit side, and then you'd say entrance fee and the amount is 1,200 rand. Does it make sense?
Yes.
Okay. So what you're going to do is just show us that 200 and then you multiply that by 6 people. Say 1.2 on the debit side. Now the bigger question is, how are we dealing with the 800 rand of the areas and the 1,300 rand of the advance payment? Because it is in the current year, it's an areas amount in the current year. So you can just say areas amount, or you can just say balance carried out. And the amount is 800 rand. And then you can just say advance payments with an amount of 1,300 rand. Okay, so as soon as you're done with that, you're going to look at any transaction that might affect your membership fees account. And then if there's no any, then you're going to balance it all together and see which side is bigger than which side. So I would like you guys to actually do me a favor. How much is 15,000 plus 1.1 plus 800 rand? How much is the amounts there?
6,900.
6,900. Thank you so much. You say 6,900. 6,900. So how much is 6,900 minus 900 minus 1,200 minus 1,300? I'm going to call the figures. 16,900 minus 900 minus 1,200 and minus 1,300 rand. How much are you getting?
$18,500.
13,500 rand. So the 13,500 is actually on the debit side, but you would say that it will go through to your income and expenditure account. Okay. We say 13,500 rand. Right. Is there anything else that you'd like to understand? But tell you what, before I finalize this thing, I would like you guys to actually, there's a question in your tutorial letter 102. If we get time, I will do it with you there. But it's a membership fees account, so it's one of those one that you can just practice. So in membership fees account, basically you need about 3 or 2 practices. But in your study guide, there's a lot of membership fees account. So when you practice that, make sure that you do understand the movement. Why are you debiting certain things and why are you creating certain things? That would help you a lot. Okay. So is there anything else that you'd like me to clarify before I close it off? So the 13,000 rand is going to go through to your income and expenditure account. You must always bear that in mind. Right. Anything else? I feel like you guys have good questions, but you are somehow scared of asking.
From my side, it's not scared of asking. If I didn't practice anything, that means I'm not going to be able to ask anything because I didn't try before. That's why. So it's not like you're quiet.
Oh, no, that's a fair point. That's a very fair point. Sizwe, please come on board. What's your take, buddy?
No, sir, I'm too following. I'm following you. But as Joanna said that we didn't make any practice before, so really I'm not really quite, but I'm following you.
Okay, no, that's great. And Joanna?
Yeah, this was very funny for me that we're using the assets and liabilities in this way. So the past areas and advance show a different debit credit balance to the ones in the current year, and I'm struggling to conceptualize.
Okay, no, that's good. So the dates are very much important as to whether you're dealing with the current or the advance or the areas. So obviously when you do the membership fees, you're going to deal with the current year, but the information might be a reflection of the previous year and the current year. It's all about the treatment as to, okay, the current year, where do I put them? If it's an advance or if it's an areas. And the most important thing is the current, the entrance fee does not form part of your membership fees. It only form part of your accumulated funds. So those are the other things that you must just know or understand. Okay, but I will obviously, if you need the solution on this one, I can send you, or you can just go to. I'll advise you where to put in the study guide. There's no need. You can just simply go through to the study guide where you do your theories and stuff like that. Happy. All right, Jimmy, do you wanna say something, or are you sorted?
No, I'm fine, thanks.
Oh no, that's great. Okay. So the 13,500 Rand, it will just go through to our incomes and expenditure account. Yep. So we are going to, when you do the income and expenditure account, we're going to have different types of the memberships in terms of the allocation of figures as to which one does it go where, what's the reason behind, does it go to the receipts and payments, or does it go to the income and expenditure account? But they're just that membership fees account that would definitely go to your statement of income and expenditure statement. I'm going to give you a break. It's 27 minutes now. Let's be back at 9:35. Please have your water or have your coffee or your tea. Or if you didn't eat breakfast, you can just quickly do that mostly and then you'll be sorted. Okay. So I'll give you a break from now. It's 27. So we'll be back at 9:35 to finalize this question. Yes. Sure, can you hear me?
Yeah. On the last transactions that we have, at the income and expenditure account, of which it's 1100, you had written 1,619 instead of 16,900.
Or meaning I didn't put the amount correctly.
Yes.
Like this. Okay, thank you very
Yeah.
much. I missed out on the zero.
Yes.
Is it fine now?
Now it's fine.
All right. Thank you so much for that one, Jimmy. Right. You guys can have a little bit of a break. Let's be back at 9:35. We'll try and finish off things. Okay. Jimmy, sort out your mic there because your reception isn't that quite cool. In the meantime, when you're on break, just try to sort out your mic. I can't hear you clearly.
All right.
All right. I'll be back with you at 9:35. Then we'll finish off. All right, we are back, and welcome back. We have to continue now. All right, the next part that we're going to do is the accumulated funds. And we're going to look at what goes in the accumulated funds and what doesn't go under that. So we know that entrance fee will be part of it. And we're going to look at, sorry, are we all back? Please respond.
Yeah.
All right, thank you very much. All right, we're going to look at the trial balance in terms of the accumulated funds and the additional information. Okay, so we've got, on the trial balance, we've got an opening balance of accumulated funds. Can you all see that? We will highlight that in yellow. Every transaction that reflects the accumulated fund, it will just go out in yellow. So let's have a look at, you remember we had 1,200 rand for the entrance fee. That will be part of your accumulated funds. And we have, let's read the additional information if they accumulated, if there's any transaction that affects our accumulated funds. Right, we've got on the upper part there, it doesn't form part of it, and the membership doesn't. Depreciation must be accounted for as well. So refreshment of inventory, we accounted for that. Interest income at Workers Bank received in respect of that. Rudy Fund, we are done with that. Current account ABSA had a favorable balance of 1,350. So there is no any item here that can form part of the accumulated funds. So what we'll do is we'll just take the opening balance for the accumulated is given there on, I highlighted that in yellow, and we are going to take the entrance fee as well. So what you will do, you will say accumulated funds, and then you will say opening balance, and you're going to say add the entrance fee. So let's go up there and look at how much the accumulated funds is. So it's 25,940. So it's going to be our opening balance here. So let's come here and see it's 25,940. And we're also going to look at the entrance fee. You remember the 200 multiplied by 6 people, which gave us 1.2. And then you add them together. Somebody help me. How much is 25,940 plus 1,200 rand? Somebody help me quickly, please.
1,140.
Sorry, please give it again.
27,140.
27,140. This is your total balance under the accumulated funds. So you see, it's not bad actually. It's not that bad. As then we are done with any accumulated funds. The accumulated funds in here. All right. Our next part will be the statement of receipts and payments. Right. First line item, receipts. And then you go down and then you say payments. What are your receipts? What are your receipts? Your receipt, can we give you a hint? We're going to have bank balance, okay, which is unfavorable. How much is the amount? 1,350. So we just say, okay, because it's unfavorable, you just say minus 1,350. And then it will be like this. And sorry, the second part should be your receipts. Actually, I have to delete this one. What are your receipts? you think your receipts are? I'm going to go back to the trial balance. You help me out. The receipts reflect the money that you have received. You have received. Do we have the receipt here?
Admission fees received to Hobbies Fair.
Admission fees received to Hobbies Fair. Okay, I'm going to highlight them in a different color. Let me use, which color can I use here? Green. And what else, Joanna? What else would be your receipt? How much did we receive for the membership fees in the current year? How much was the initial amount? Okay, let me do this. Hobbies Fair expense, is it a receipt? Is it a receipt?
I don't think it is.
You don't think it's a receipt, okay?
Or maybe the Ready Fund is a receipt.
Which one?
Ready Fund?
You said the relief fund.
And the Ready Fund in red.
The Rudy fund is a receipt now. There was an investment. How about interest income? What was bank at 8%? How about an interest income?
I think interest income it's a receipt.
It is a receipt, Jimmy. Thank you.
Yes.
And membership fee balance.
Membership fee balance, right? You mean this one? I'm gonna change the color to the green as much as we've used it. What else do you think goes? Sales, right? We've sold our refreshments, so there should be a sales, there should be an interest income, there should be a membership fees account. Okay, I'm gonna write them down. To my understanding, I think those are the last one. What? Membership fees, interest income, and we agreed on what else? Hobbies Fair admissions. I think that's what and the refreshments that have been sold. $1,200, that's our pure sales. Membership fees, we take it as it is, 15,000. Income, interest income. You remember the 1.6 that we had? 20,000 matching that by 8%. Remember that? In Hobbies Fair admission, how much is the amount there, is 6,300 rands, right? Somebody give me the total. How much is the total receipts? Let's add 15,000. If you've got a calculator there, please give me the amount. 15,000, 1.6, 6,300, and 6,200 rand. How much is it? Are you guys helping me there?
29,100.
29,000. This is your total receipt. It's 29,100. Okay. Let's make it bold. Okay. So let's look at the next item. It will be payments. So what are your payments to the trial balance? So your payments are your expenditures, right? Let's go up. What are your expenditures? Telephone expense. Is it an expenditure?
Yes.
Right.
And wage.
And wages. Water and light. Is it an expenditure? Is it an expenditure?
Yes.
Okay, I'm going to change this color for the maintenance building because it is an expenditure as well. So I'm moving to the red, sorry, from the red to the purple. Hobbies fair expense. Is it an expenditure?
Yes.
And then what about the interest expense?
Yes.
It is an expenditure, right? Thank you. And what else? What else is an expenditure? Okay, I'm going to write them down, starting with the telephone expenses. Please help me by giving me the figures. So the payments, telephone expense, how much?
450.
150. And then we've got wages, right? How much?
5,000.
And what else do you have? Water and lights.
Mm-hmm.
How much?
4,600.
4,600. What else do we have?
Maintenance
Maintenance,
is
building. How much?
1,500.
1.5. What else do we have? I think we've got interest expense, right?
And hobbies fair.
But let's start with, because I was typing the interest expense. How much is the interest expense?
3,000.
3,000. And then you said we've got hobbies for expense, right?
Yeah.
Expense. How much?
8,200.
3,200 rand. Is there anything that we left out?
Yes.
Okay, which one is it? Okay. How much is the purchases there?
3,600.
Okay. Johanna, you said there's something that we've left. Which one is it?
And that's everything.
Okay, somebody help me. Please put your calculator ready. I'm going to give you the figures and then you add them for me. 450 plus 5,000 plus 4,600 rand plus 1,500 plus 3,000 plus 8,200 plus 3.6. How much is the total payment?
26,350.
Give it again. 20.
26,350.
It's 26,350. Right, and then what we're going to do now is would say, right? Please give me let's calculate again. 29,100 minus 1,350. How much are you getting? Are you getting somewhere? 29,100 minus 1,350.
Oh, sorry, I was on mute. 19,750.
It can be 19,000.
Okay, you said
29,100.
29,000.
100 minus 1350.
1,300. Oh, 27,750.
Okay, and then minus 26,350.
1,400.
That's your total bank balance at the end of the financial period. I'm just going to bold it and highlight that. Right, so that brings us to the end of our statement of receipts and payments. Is there anyone who needs clarity on this? Or you need to practice more?
From my side, Kuti, I'm going to practice more, and then when I experience any problems, and then I'll contact you. At the moment,
no problem. I would appreciate that. All right, now we're moving on to the income and expenditure items. Income and expenditure statement for the year ended 31st December 2022. Right, then the first line items you're going to have was called the incomes. In your second line item, you're going to have expenditures or expenses. Expenditure. Okay. So what are the incomes that we have to include in here? I'll give you the first one, membership fees. How much? The membership fees. Remember the one that we have adjusted for 13,500 when we do the membership fee T account. That's the one that's going to be under disclosure of the incomes. And what else?
Gross profit.
Gross profit. That's very correct. Thank you so much for that. How much was the gross profit? It's 2,700. I remember. What else? You can include the hobbies, right? 6,300. Okay, anybody with a calculator, please add these figures for me. 13,500 plus 2,700 plus 6,300. Right? How much is the total there?
22,500.
22,500. Right. What are our expenditure? What is our expenditure? Or likely the same one. 4-base fare. Expenses. How much is the amount? If you're looking at the trial balance. How much is our hobbies for expense? 8,200, right? And the other one? Interest expense? What else? Telephone? What else? Wages? Water and lights? Depreciation. Can somebody calculate the depreciation for me? Okay, here's the trial balance. Can somebody calculate the depreciation for me? Okay, we've got equipment and cost and furniture with the accumulated depreciation. And when we go down to the additional information, they say that depreciation must be accounted for at 10% per annum on the demolition balance method. How do you calculate depreciation for this? Depreciation on the demolition balance method, we did this before. Jimmy? For you to get the conclusion, the final figure under the depreciation, you don't need the current, what do you call it? You don't need the current topic E knowledge. It's something that we did in the past. What do you guys think? Yes, sir.
For depreciation, they said on a straight line.
Not diminishing.
We're going to say 10,000 times 10 over 100. 10,000 over 1 times
10 over 100.
10%.
So it's going to be 10,000 multiplied by 10%. Is that what you're saying?
Yes.
All right. Thank you so much for that attempt. What? Any dispute? Your Honor?
Yeah, we take the 10,000 minus accumulated depreciation.
Yeah.
To get the balance, the carrying amount.
Carrying amount.
Then we times that by 10%. It's so the balance is 7,290.
7,290. Okay, Johanna, thank you so much for that input. Actually, you nailed it on the call. All right, this is what she said. She said that the depreciation calculation would be as follows. It's 10,000. Give me that process again. It's 10,000 minus
2,710.
Okay, and then you get the carrying value, right? You multiply that by 10%. How much was your final figure there?
729.
729 bits. Okay, thank you so much. You got it way right. Thank you so much for that. Okay, give me these figures now. How much is the interest expense? Look at the trial balance. Okay, let me just do this quickly. How much is the interest expense?
It's 3,000.
3,000. Okay, and the telephone expense? The telephone expense? Somebody give me how much is the telephone expense? Guys, can you hear me?
450.
450. And then how much is the wages?
5,000.
5,000. And then how much is the water and lights?
4,600.
4,600 rand. Okay, Johanna, while you're still there, please let's help me add this amount. Let's start over. 8,200 plus 3,000 plus 450 plus 5,000 plus 4,600 rands plus 729.
It's 21,000.
Sorry, it's 21,000.
979.
979. Okay, there's somebody who's making noise in the background there, but let me check who the person is. Jimmy? I think the background noise is actually for me. Can you just be on mute, please? Unless if you want to say something. Okay, thank you very much, Jimmy. Okay, thank you very much, Johanna. Give me, how much is the difference between 21,979 and 22,500 rands?
It's 521.
521 rands. Please, it's your end total. That's the difference between your incomes and your expenses. So that means that we've got a surplus, 521. Okay, so that's your surplus. So these would be your end total when you deal with the income and expenditure account. Okay, let me just underline that. I'll be with you just now. There we go. All right, your surplus is 521,000. All right, that brings us to the end of our question. So I'd like to know from your side, is there anything that you want me to clarify?
And then in dealing with accumulated depreciation or on that transaction that we did of 10,000, if I was doing that with like 10% of 10,000, which will give me 1,000 rand, then I add it to the accumulated depreciation, then I minus it from 10,000. Will I be wrong?
Yes, you would be wrong. Okay, Jimmy, when you are, we've got different methods of calculating the depreciation. Is the straight line, is the diminishing balance method, is the production units method. With the straight line, meaning that you're taking the cost directly and then you multiply that by the percentage. Unless if there's a residual value. If there's a residual value, you just say cost minus the residual value and multiply that by the percentage given. The second part is the diminishing balance method. With the diminishing balance method, you have to follow the cost accumulated depreciation, and then you multiply that by the percentage given. Right, and then we've got the other one, which is the production units method. You are actually going to take the amount and then you multiply that by the total number of, the expected units to be produced, and then you divide that by the total units produced. Those are the three methods that we have to comply with, and then that's the process that you have to follow when you calculate that depreciation.
The receipts and payment statements.
Yes.
We said that it's the membership fees earned. And now I'm seeing in the notes, they say it includes accrual. It includes the prepayments and the amounts received in advance.
Yes.
So I don't think we added those ones.
No, when you do the income and expenditure, that's when you're going to make an adjustment with regards to the areas in the advance.
Sorry, I mean the receipts and payments is not supplied.
I beg your pardon?
Sorry, here on page number 3, it says prepayments, income received in advance and accrued amounts received or paid will also be entered because the accrual principle is not applied when this statement is prepared. Is that an error?
No, it's not an error, but what they're saying is if it's already included in there, that's when you have to make those kind of adjustments in the receipt. Otherwise, you have to take it as pure as it is, or you have to adjust that when you do your income and expenditure account.
Okay.
All right, under the statement of the receipts and payments, you're going to look at how much of the membership fee have we been received in that current year. You are only going to make that kind of an adjustment when, because already the assumption is those amounts are included in there. But when you do the income and expenditure account, that's when you are actually going to calculate, sorry, that's when you're actually going to adjust your accruals along with your advance payments and the entrance fee or the accumulated fee. Okay, we seem to be done with this part of the content, and then what we're gonna do now, because we don't have any more questions, I'm just going to, for this last hour, I'm just going to take you back to the trade and other receivables control accounts, okay? Or I can take you through to the depreciation questions, fine? Do you all have tutorial letter 102? But I'm gonna take you back to the first question. I'm gonna type it here. And then we are actually going to calculate the depreciation. Okay, so I think I made a mistake there, but I didn't include this. The surplus amount, actually, it should be part of the accumulated funds. Let me just go there quickly. This 521, it has to be part of the accumulated funds. Let me just go back quickly. It will be at surplus amount of the total figure for the accumulated funds is going to change. So you'll say the 25,940 plus 1.2 plus 521, and it's 27,661. Total will be 27,666. Okay, now we're fine with that. Okay. Because okay, let's talk about the meeting of during the. I think now things are better now. Load shedding has been suspended for some time, so we will be able to connect nicely. I just want to show you before I move on to the next one how your solution looks like. Tell me if you see it. Can you see the new Excel spreadsheet?
Yes.
Okay. So the first one is your special fund account, and the second one is your trading statement. We ended up with a gross profit of 2,700. And the third one is your membership fees account. So we closed things off for 16,900 rand. And the fourth one, it's accumulated funds with a total of 27,661. And the statement of receipts and payments, we had the bank balance at a positive amount of 1.2. And we have the last one, which is the income and expenditure statement for the year ended. We had a surplus of 521. So this is our final figure here. So now I just want to do, okay, prepare yourself on the financial statements so that things will be easier for everybody. Make sure that you understand the income statements, your balance sheet, your statement of changes in equity. The most important thing, the notes. Make sure you gather yourself around the notes as well, and then we'll do the depreciation. There's a lot of depreciation that we need to do. One thing that I have promised you guys to do, I don't know if we'll cater for that now, but I don't think so. I promised that I'm going to show you the long-term loan on how you're going to disclose that, the calculation of the interest expense, and then the disclosure in terms of your statement of financial position, and how does it affect your income statement. That's going to be available for you on a Monday. I'll show you that part. For a question that I prepared for you on Monday. Okay, and since while you guys do not have the tab 102, okay, this is one thing that I have for you. I want us to actually do it together. It's one of the things that we did previously. Okay, so we have, I'm gonna type this and then we'll continue by doing it. Okay, it reflects the trade and other receivables T accounts and the trade and other payables T accounts. All right, one more thing that I forgot to tell you about that we'll do on Monday is we're going to do the VAT control. So VAT input and VAT output, we're going to show the ledger accounts based on that one as well. So it's not that long. So I already have a question for that one as well. Okay, the information I have here says that without any waste of time here, the question says that we've got trade receivables control account. So it says that the following is an extra from the general ledger of Smart Boutique for December 2001. We've got the balance brought down. Let's look on the left side, the debit side. We've got a balance brought down of 15,670. It assumes to be correct. We've got a bank with the total trade receivables column, 45,495. For the settlement discount granted, we've got the credit sales of 48,165. Sorry, the settlement discount granted is it's 685. For the drawings of 150, we've got the purchases returns. So that's credit purchases. And then we've got the sales on the credit side. Let's have a look at that. We've got the sales returns, credit sales of 2220. We've got an RD check on the bank. It's 42. Right. Let me send just a moment. I have to send these questions. Okay, let's have a look at the credit side. We've got the bank RD check 425. We've got the credit purchases 33801. We've got the cash purchases 1008. For the settlement discount received of 275 rands. The bank total trade payables column is 3980. And then we're going to carry down of 70587. Additional information, it says that an inexperienced bookkeeper prepared the trade receivables control. In addition to the error made in the trade receivables control above, an investigation reveals the following. The total of the trade receivables balance as per the list of the trade receivables at 31st December 2001 to 16,060. Okay, this is how we're going to approach this question. You're going to tell me as to whether this goes through to the trade receivables control account or the trade payables control account, or it's a recon transaction. I'm not going to type it here. You just have to tell me, and then I'll let you know as to whether it's actually the right thing or the right way of doing it or what. Okay, and then we've got an amount of 115, which has been written off as irrecoverable, has erroneously been added to the credit sales amount of 8165. This entry has been posted correctly to the applicable account in the trade receivable ledger account. Sales journal was overcosted with an amount of 120 rands, and the credit sales of 170 was posted correctly to the sales account and trade receivables control account in the general ledger, but was not posted to the specific debtors account in the trade receivables ledger account. Credit note number 003 for 70 rand was recorded correctly in the sales returns journal, but posted to the wrong side of the personal account of the debtor in the trade receivable ledger. Okay, trade receivables columns in the cash receipts journal include an amount of 195 rand being the cash settlement discount received from a creditor. Purchases journal was undercosted by an amount of 718. An account of 1603 for freight and trade sales was received from Quick Transport. The cost of the freight must still be accounted for in the accounting records in the accounting records. So there's an RD check of 425, which, okay, 425 was the check of the debtor in payment of his account. The check was returned because the debtor had insufficient funds to cover the check. On the 1st of December 2001, the balance of the trade payables control account amounted to 8340. Okay, let's see what the last one entails. I think 8340. So they should be required. All right, the record says that prepare the correct and properly balance the trade receivables and trade payables control accounts as marked boutique for December 2001. Prepare the reconciliation of the total of the least trade receivables balance with the final balance of the trade receivables control account is calculated in equation 1. Okay. So first thing first, before you approach this kind of equations as your T accounts, you need to know as to whether it's an asset or it's a liability. And then after that, you need to establish as to on which side do those kind of type of assets increase and decrease at. Okay. So without any waste of time, because I think we are left with almost 20 minutes. All right, the first one, which is the trade receivables control account, let's deal with that one. We're going to go to the first page. All right, we've got the balance brought down of 15,670. Where do you think that goes? It's a trade receivables control account, T account. 15,670. Where do you think that goes? That's an opening balance of the trade receivables control account. So with that said, it means that it's on the debit side. You're going to say on the debit side, 15,670. The reason why it goes through to the debit side is because it is an asset, and asset have an opening balance on the credit side. And then we've got the bank, which has the total trade receivables columns with an amount of 45,495. And what do we do with that? What do we do with that? We are decreasing the trade receivables control account. It means that it's going to come through to the credit side with an amount of 45,495 francs. Right, and then when we go further, we've got a settlement discount granted of 685. What do we do with that? So in terms of the discounts, you've got only two types of discounts, the granted and the received. So we're going to put that on pause for now. Let's move on to the next one. Drawings. Where do you think the drawings go, guys? Drawings of 150. What do we do with it? Our drawings has no effect in terms of this or the both of these T accounts. Okay, so we've got a credit sales of 48,165 francs. Where do you think that goes? When you sell goods on credit, it means that you're raising the data, and the data are increasing on the debit side. So you're going to have 48,165 francs on the debit side. Okay, so let's have a look at the next one. Purchases returns. It has nothing to do with trade receivables. Purchases returns is a trade payables control account. I'm going to have a look at the items on the credit side. So you've got a sales returns with an amount of 2220. What do we do with that? Sales returns is usually for the goods that we have sold. Maybe they've got certain defects on there, so customers are bringing them back. They're going to decrease your trade and other receivables control account. So the question is, on which side does it decrease? So it does decrease on the credit side. It means 2,220 is going to go through to the credit side of the trade receivables control account. Right, we've got an RD insufficient check with a bank with an amount of 425. So what do we do with that one? The check has been returned. It means that our debtors are still going to increase, or we as the debtor, we're still going to increase because there was no money for the payment. So the increase would just go through to the debit side. Right, so you do bank RD check on the debit side with an amount of 425 francs. Right, credit purchases, it has nothing to do with trade debtors. And then the cash purchases, it has nothing to do with trade debtors. Settlement discount received with an amount of 275 francs. What do we do with this? What do we do with an amount of 275? Nothing as well. So we've got this, okay, settlement is fine. Bank, total trade payables column, 3980. It's a trade payables control account, and then we've got a balance carried down of 70,587. We don't do anything with that one as well. All right, in regards to the trade and other receivables control account, the T account has been done. So what do we have to do now? We have to look at the additional information. Let's look at bulletin number 1. it says that the total of the trade receivable balance as per the list of the trade receivables of 31st of December 2001 amounted to 16,060. That has nothing to do with trade receivables control account. It's the recon account actually. So we're going to look at bulletin 2, which says an amount of 115, which has been written off as credit losses, has erroneously been added to the credit sales amount of 48,165. This entry has been posted correctly to the applicable account in the trade receivable ledger account, meaning that it has been posted correctly to an individual ledger account. But what do we do with this amount under the trade receivables control account? How much is the amount? 115. Right, so we are erasing this data now because it's a credit losses. So, but that would decrease our trade receivables control account, and then it does decrease on the credit side. Right. So I'm going to move on to the sales journal. Okay, bulletin number 3. It says sales journal was overcasted with an amount of 120. So meaning that we need to reduce the trade receivables control account because it was overcasted with an amount of 420, right? So it's going to go through to the debit side. Oh, sorry, it's going to go through to the credit side just to show that it's a minus. But credit sales of 170 was posted correctly to the sales account and trade receivables control account in the general ledger, but it was not posted to the specific debtors account in the trade receivable ledger. Sorry, I think I read it incorrectly. Credit note number 003470 Rand was recorded correctly in the sales returns journal, but posted to the wrong side of the personal account of the data in the trade receivable. It's a recon account. Okay, so the next bulletin says trade receivables column in the cash receipts journal include an amount of 195 Rand being the cash settlement discount received from a creditor. So the question is, what do you do with this amount of 195 Rand? It doesn't affect your trade and it does affect your trade and other receivables. So it's going to reduce our trade and other receivables. So it's going to go to the credit side. So you've got a purchases journal that was undercasted by an amount of 718. So what's going to happen here is it's a trade and other payables control account, not receivables control account. An account of 1603 for foreign credit sales was received from quick transport. The cost of the file must still be accounted for in the accounting records. And then what do we do with this one? 1603. What do you think we are doing with this one? It's a trade and other payables control account. So the other one, we've got an RD check of 425. That was the check of a debtor in payment of his account, and the check was returned because the debtor had insufficient funds to cover the check. So I think we've recorded that under our, how much is it? 425, right? We have already recorded that before, but with an amount of 420. Right, and it says on the 1st of December 2001, the balance of the trade payables control account amounted to 8340. Okay, then with those amounts that have reflected under your trade and other receivables control account, sorry, I'm going to send you the solution on the WhatsApp group as well. So I'll just shoot it and send it through to you so that when you do this question, you can just go through it on your own. Okay, so let's go back to the first part, the general ledger under the trade receivables control account, because we're done with the trade receivables control account. Total balance was 63,725 on both debit and credit. And we found out that debit is greater than the credit, and then you've got balance carried on of 16,090. Okay, trade payables control account, it's a liability account. Liabilities increases on the credit side and they decrease on the debit side, meaning that an open balance would come through to the debit side. Okay, so bank balance, I'm going to go back and reread this information again. Let's look at the debit of the T account. It says 15,670 rands. That's a trade and other receivables account. Bank total trade receivables column 45,495. That is a trade receivables control account. We've got a settlement discount of 685 rands. It was actually not accounted for. And then we've got the drawings of 150. It's going nowhere. They just give you that information to confuse you, just to test if you do understand what is going on. For the purchases returns 2131. So these must go under your trade payables control account. It's a return. So we purchase goods, we found out that they've got a defect, and then we take them back to the supplier. That means our liability is going to reduce. On which side does our liability decrease? So the standard tells us it decreased on the credit side with an amount of 2131. Right, let's go to the credit side of the trade receivables control account. We've got a sales returns. It has nothing to do with the payables. We've got a bank RD check of 425 that has been recorded before, and we've got the credit purchases 33801. So this amount, it goes through to the credit side of the trade and other payables control account. And then you've got a cash purchases. It has nothing to do with the trade and other receivables control account or trade payables control account. We've got the settlement discount received of 275 rands. So it is nothing to do with both as well. So you've got a bank with a total trade payables control column 3980. Let's see, where does that go? On the debit side of the trade payables control account. So this is what we have paid. So it reaches the trade payables control account. So according to the standard, we all know that it does decrease on the debit side. The balance carried down, they just show you how much was the end balance under the trade receivables control account as the data. Let's all turn on to second page, the second part. Right, I'm going to read the bulletin again. So the totals of the trade receivables balances as per the list of trade receivables at 31st December 2001 amounted to 16,060. That's a reconciliation account. I'll tell you how you're going to reconcile that. The amount of 115, which has been written off as credit losses, has erroneously been added to the credit sales with an amount of 48,165. So this entry has been posted correctly to the applicable account in the trade receivables ledger account. So this has nothing to do with the payables. Sales journal was overcosted. We've recorded that under the trade and other receivables control account. And we've got a credit sales of 170, which was posted correctly to the sales account, and the trade receivables control account in the ledger, in the general ledger, but was not posted to the specific account data. It's a recon account. Credit note number 003 for 70 Rand was posted correctly in the sales returns journal, but posted to the wrong side of the personal account of the data in the trade receivables ledger account. It's a recon. So I'm just going to emphasize what could be the bigger point when we deal with the error. Trade receivables column in the cash receipts journal including an amount of 195 in the cash settlement discount received from the creator. Purchases journal was undercosted with an amount of 718 Rand. These should go under your credit side of the trade payables tree accounts because it was undercosted. It means that we have to increase our trade and other receivables, trade payables control account. An account with an amount of 1603 for fraud and credit sales was received from Quick Transport. The cost of the fraud must still be accounted for in the accounting records. Okay, we got a statement. So you're going to have a fraud and sales under the trade payables with an amount of 1603. All right, so we got a statement from the supplier. So nothing has changed in terms of the payment. So that means the supplier account for us is actually still on an increase. Hence why you see it on the credit side of the trade payables control account. So we've got an RD check with an amount of 425. I think we record that was for the check of a payment of his account, and the check was returned because the data had insufficient funds to cover that. But number two, on the 1st of December 2000, the last one, it says on the 1st of December 2001, the balance of the trade payables control account amounted to 8340. So that would be your opening balance. What you would do, it's a balance brought down on the credit side, and then you put 8340. Okay. So I think trade payables control account has been covered, and the trade receivables control account has been covered as well. We are left now with the reconciliation. So reconciliation, I want everybody else to go to the second part, where on the first bulletin it says the total of the trade receivables balances per the list of the trade receivables at 31st December 2001 amounted to 16,060. That's your opening balance. You just say total list of trade receivable balances, and you say 16,060. Then we're now going to look at bulletin number 4. Let's look at the credit sales of 170 that was posted correctly to the sales account and the trade receivables control account in general ledger. So the trade receivable, it's fine. Trade receivable control account is fine. However, it was posted on the wrong side of the personal account in the trade receivables ledger account. Hence why you see I bracketed the recon there. But how do you deal with an error that has been made or posted to the incorrect side? The standards tells us that you need to correct the error first on that side before you can put it in the right transaction or where it belongs. And then by doing that, you would say, I think I'm not saying it correctly. It's credit, wait. Okay, I'm right. Credit note 00 number 3. So what you do is say 70 and then multiply by 2. That's how you correct the error, because if you don't multiply that by 2, it means that you're undercounting and you're not complying with what's called the double entry system. So the sales returns columns, it will be 70 multiplied by 2, and then you get 140. So your balance at the end of the period is 16,090. Right, so that brings us to the end of our trade and other receivables control account. And now I'm going to be open up for questions just before I close down. Okay, I'm going to send the solution now through to you. In the meantime, you can just try and work on what I've sent. If you can see what it looks like on the solutions and the questions. I'm very much aware that it's actually not even clear on that one.